NIO just reported their latest quarterly earnings and the results were mixed. At the time of making this video, the stock is down around 2%. NIO has a market cap of $11 billion. Yes, the stock is now down to $5.22. If you look at valuation with regards to EV to sales for the next 12 months, we're now at just 1.1 times. Now, if we look at what the analysts are estimating for fiscal year 2024, you can see that sales is expected to be around $11 billion. That's why you get the EV to sales of 1.1 times. But as you can see, the estimates have been revised down quite hard for the last couple of quarters. And as you will soon see, $11 billion after that Q1 guidance seems quite far away. It does seem like 2024 is going to be quite a difficult year for EVs across the board. You still have high interest rates, macroeconomic environment is not great, whether it's in Europe, in the US, or in China. So it's not just specific to NIO. We have seen this across the board, but of course, some companies are profitable, the other ones are still losing some money. Now, before jumping into the report, if you enjoy this type of videos, leave it a thumbs up, subscribe if not, we really appreciate that. Want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let's start off with the vehicle deliveries. They came in at just over 50,000 for the fourth quarter, consisting of 33,679 premium smart electric SUVs and 16,366 premium smart electric sedans, representing an increase of 25% year over year, but a decrease of 9.7% quarter over quarter. With regards to deliveries in 2023, those reach 160,038, an increase of 30.7% from 2022. So definitely 2023 a much better year than the one before. Here you can see the trends with regards to the deliveries. It does seem like you are now getting higher deliveries quarter after quarter, especially after that huge jump they made from Q2 to Q3, 2 quarters of over 50,000 in deliveries. But as you will see in Q1, that number will drop. Then, with regards to the highlights, so vehicle sales reached $2.17 billion, representing an increase of 4.6% year over year, but a decrease of 11.3% quarter over quarter. With regards to vehicle margin, that has seen some improvement. This was now 11.9% for the quarter, compared to 6.8% same quarter last year and 11% the quarter before. So some positive improvements there. With regards to total revenue, that reached $2.4 billion for the quarter, representing an increase of 6.5% year over year, but a decrease of 10.3% quarter over quarter. You'll see this happen for quite some metrics here. Gross profit increased 105.7% year over year, but decreased 16% quarter over quarter. With regards to gross margin, that was 7.5% for the quarter compared to 3.9% the year before and 8% the quarter before. With regards to net loss of $756 million, a decrease of 7.2% year over year, but an increase of 17.8% quarter over quarter. So while we're seeing some improvements with regards to vehicle margins, the rest of it quarter over quarter has seen a deterioration. Now, if we compare the full year 2023 to 2022, vehicle sales have increased, vehicle margins have decreased 420 basis points, but in the last 2 quarters we are seeing some improvements there. It's because the first 2 quarters of that year were very, very bad, so you're seeing that big hit. Let's see if the improvements can continue in the coming quarters. With regards to total revenues, that's up 12.9%, but gross profit decreased 40.7% year over year, and gross margin is down close to 500 basis points. Things aren't getting that much better if you look at loss from operations, adjusted loss from operations, net loss, and adjusted net loss. All of those metrics have become worse in 2023 compared to 2022. Now, looking at what's happening already in 2024 with regards to deliveries in January and February. So NIO delivered just over 10,000 vehicles in January and 8,132 vehicles in February. Of course, February is the month where Chinese New Year's happen. So that will have an impact also on the overall performance of that quarter. Now, if you take those two numbers together and then you go down and look at the outlook that the company has given us for Q1, they expect deliveries of vehicles to be between 31 and 33,000 vehicles, meaning we're going to get a reacceleration in deliveries in March between 12.8 to 14.8 thousand vehicles. So that will represent a decrease of approximately 0.1% to an increase of approximately 6.3% year over year, and of course down quarter over quarter from the 50,000 vehicles delivered in Q4. With regards to total revenues, as I said at the start of this video, you can see here Q1 already getting hit because of Chinese New Year, of course, $1.47 billion. If you annualize that, you're not getting anywhere close to the expected $11 billion that the analysts are looking for. And that will represent a decrease of approximately 1.7% to an increase of approximately 3.8% from the same quarter in 2023, and of course a decrease from Q4. So moving on to the graph right now, as you can see, $7, which was a previous support line, did not hold back in mid-January, big red candle, and then it did try to go over the 20-day moving average a couple of times, got rejected there 3 times. Now we're sitting at $5.28, which is the lowest price we've been since June of 2020. Now, of course, there is a lesson to be learned here. Lower can go lower, and just because the stock is cheaper than before does not automatically make it a buy, because you have to look at the business. As always, look at the business behind the ticker. Usually tells you a better story than just the price movement of a stock. So overall, to conclude, while we can see some improvements with regards to vehicle margins, as I say, 2024 is really not looking like the year for EVs. We've seen this across the board. Some companies are better positioned than others. Some companies will exit 2024 into 2025 in a much better state. Let's see what happens with NIO. Right now, I don't really see any reasons to hold these types of companies or stock unless you want to put a small bet on it that it will be successful in the future. But I do think there are other companies out there. For example, another Chinese company, Li Auto, growing like wildfire right now, could be an interesting choice. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if not, and I'll see you all in the next one. Bye bye.